Hey everyone, welcome back to the channel. I hope you're doing well, staying positive, and keeping a good mindset. Today, I want to dig deeper into some exciting updates regarding the Iraqi dinar. These developments might just change how you view this investment and what actions you might consider in the near future. But before we get into that, there's something I'd like to share with you that's been making major headlines lately. Iraq is back in the news, and this time it's not for the usual reasons. They've recently been making waves due to having one of the largest gold reserves in the Arab world, holding a staggering 162 tons of gold. Yes, you heard that right, 162 tons. That's a massive asset, and Iraq is not shy about letting the world know just how solid their foreign currency reserves are. Why is this important? Well, it sends a clear message to the world. Iraq isn't just scraping by, it's thriving. They're not a nation bogged down by debt. In fact, they are a creditor nation. This is a significant point they want to emphasize as they lay the groundwork to potentially shift the value of their currency in the coming months or years. Now, what does this mean for you if you're holding Iraqi dinars? If the value of the dinar does increase, you could find yourself in a situation where you'll need to exchange your dinars into US dollars at a bank exchange center. From there, you could deposit those funds into an American bank. Some of you have shared with me that you're holding a large amount of dinars, let's say 2 million dinars, and you're considering cashing out, maybe cashing in 1 million now and holding on to the other million to see if the value rises further. Is that a smart strategy? Should you wait or cash out now? Well, let's dive into this common dilemma. Have you ever found yourself holding an investment, wondering whether you should just sell and move on? Maybe it's not performing the way you expected, or it's taking a lot longer than anticipated to show results. I totally get it. Being patient with investments is tough, especially when your hard-earned money is involved. So let's break it down. When it comes to holding on to the Iraqi dinar, you're likely asking yourself, should I cash out now, or do I wait for a higher rate? It's a question many people are grappling with. Over the years, the dinar has been a hot topic, with some folks predicting it will skyrocket to $2, $3, or even $4 per dinar. But if you've been holding on to it for a while now and the value hasn't moved as you hoped, it can be incredibly frustrating. Waiting for the value to rise might sound appealing, especially when you think about the potential upside. But what about the other opportunities out there? There are other investment options that are performing well right now, and if you're too focused on waiting for the dinar's value to increase, you might miss out. For instance, the stock market, while it has its ups and downs, is still a place where people make solid returns. Of course, it's not without risk, but there's potential for growth in many sectors. Or take cryptocurrency. Yes, it's volatile, but for those who've made smart moves, the returns have been significant. If you're sitting on your dinars, waiting for them to appreciate, you might miss out on these opportunities where growth is happening right now. Now, let's consider a potential scenario. What if you cashed out your dinars today and took those gains, then reinvested them in something with a solid, proven track record, like a mutual fund that has shown consistent, steady growth over the years? If you made just a 10% return in 1 year, that could be a significant win. It's steady growth. And while you're waiting for the dinar to rise, you could miss out on that guaranteed return elsewhere. I know that many of you are probably feeling frustrated, constantly checking the news for any updates on the dinar, hoping for a miracle. But what if that miracle never comes? If nothing changes in the short term, should you continue holding on, or is it time to move on? It's a tough decision, and it's important to consider the bigger picture. So, let's ask the real question. What's more effective? Holding on to an investment that might take years to appreciate, or making a strategic move now and reinvesting the gains you've already made? I believe it all comes down to taking control of your financial future. By weighing your options, you can make an informed decision that aligns with your long-term goals. Now let's dive into the economic side of things for a moment. To understand where Iraq's currency might be headed, we need to take a closer look at its current economic system. One key factor here is the real effective exchange rate, REER. The REER is an important measure because it takes into account the value of a country's currency against a basket of other currencies, adjusted for inflation. This gives us a better understanding of a currency's actual value in the global market. Iraq currently uses a fixed exchange rate system, meaning the Iraqi dinar is pegged to the US dollar. While this provides some stability, it also has its drawbacks. For one, it can lead to struggles with inflation and economic shocks. Why hasn't Iraq moved toward a more flexible exchange system? Well, one major reason is the political instability the country has experienced over the past several decades. Political stability is a critical factor for attracting investors, and without it, it's hard for Iraq to implement major financial reforms. Additionally, Iraq's economy is heavily reliant on oil exports. When oil prices fluctuate, the value of the dinar can be directly impacted. By maintaining a fixed exchange rate, Iraq can shield itself from some of these shocks, but it's not a foolproof solution. The country's long-term growth potential is limited under this system. Let's talk about the foreign exchange market, Forex, for a moment. In order to truly participate in the global Forex market, a country needs a currency that's freely adjustable, meaning it can be traded without restrictions. Iraq's fixed exchange rate system limits its ability to engage with the global Forex market, which in turn restricts the use and recognition of the dinar in international trade. What does this mean for businesses in Iraq? They often face barriers when trying to trade with neighboring countries or with international partners. Many businesses prefer to deal in more stable currencies, which can hinder Iraq's ability to expand its trade relationships. This also creates challenges for Iraqi importers and exporters, who face uncertainty and higher costs due to the lack of a reliable exchange rate. So how does this impact everyday Iraqis? With a less flexible exchange rate, individuals can struggle to get fair value for their dinar when traveling or doing business abroad. If you're traveling outside of Iraq, exchanging dinars for local currencies can be a hassle. And for Iraqi businesses looking to import or export goods, the lack of a reliable exchange rate means higher costs. Looking ahead, what can Iraq do to address these challenges? First and foremost, Iraq needs to focus on political stability. This will help rebuild trust in its financial system, and with trust comes investment. Second, Iraq needs to diversify its economy beyond oil. The oil market is volatile, and while Iraq has been fortunate to benefit from it for years, relying solely on oil exports makes the country vulnerable to global price fluctuations. If Iraq invests in other sectors, like agriculture, technology, or infrastructure, it can stabilize its economy and create more opportunities for growth. Lastly, there needs to be a push for financial literacy and public education. Understanding how currency exchange works, as well as other key economic principles, can help Iraqis navigate the challenges they face when it comes to the dinar. The more people understand the system, the better equipped they'll be to make smart financial decisions. In summary, while Iraq hasn't yet transitioned to a flexible exchange rate system, the potential impact of this shift is far-reaching. Political stability, economic diversification, and public education are key factors that will shape Iraq's financial future and the value of the dinar. So where do you stand? Are you still committed to holding on to your dinars, or are you starting to consider other investment opportunities? Let me know what you think in the comments below. If you found this video helpful, don't forget to like, share, and subscribe for more content on smart investing and financial tips. Your journey to financial freedom starts with the right choices today, so make sure you're setting yourself up for success.